Hey everybody, welcome to another layer out demo. This model has been causing a little bit of kind of confusion. So first of all, we are in the layer out model. I'm going to show you a few things actually, make sure I'm on the right tab. Start at the beginning and we'll leave these three open. So first of all, let's talk about a key element. A lot of people are confused about the slider and how the slider works. First of all, don't get too bogged down, but again, the model is built around the trend at the point of time looking back, and it's a function of the actual Sharpe ratio, the volatility, and a bunch of other factors that are out there too. So what it does very well is, it was a thing that I've been grappling with a lot of my career, is to identify scientific support and resistance levels to be able to get in and get out, and that is key. So if you look at this particular model here, I just thought this was interesting going back in time. My cost basis for Bitcoin is just under $9,000. So you can see here 8,778. If you assume that at this point in time, going back to say late 2020, you pick up a price like from where it is to 30,000, it will show you the potential expansion levels automatically. And what I find uncanny about this is a couple of things. One, you can look at layers. I like to use 5 layers. So to get to 5 layers, you go in here and you go to layers less, and you will see those 5 layers. Now, for the point of illustration, I'm going to show all layers. And you can see, actually, no, let's do less because that's too many. But we'll talk more about, I like to use everything we build, we use default as much as possible. So with that, what's important about these layers is here you can see the 30,000 layer not was only hit once, but a couple of times. In addition, you can see the level layer 8. There was a lot of activity around layer 8 as well, across and above. Same thing with layer 9, and then across finally layer 10 at the very end. So that is just an example of what you can do here. And this is part of the magic sauce because crypto is so volatile. And I'm just doing crypto here. And by the way, just a reminder, this trading style is very aggressive because the asset is very volatile, and that can be seen down here. Now, getting down to this Sharpe ratio, which gives you an idea of where things are. These are the returns above 0. So when you're above the 0 line, there's lots of returns. But when you do, 5, 6x standard deviations away from the normal, that is extremely volatile. And that's exactly how this model works. It feeds off of this as one of the elements of data to calculate what the levels could be going forward based on historical volatility. So I think that's where it got a lot of people bogged down. But the magic sauce, which I will stress, and I was talking a bit about today as well, is getting in and getting out. So imagine we are here with Bitcoin back in, say, January 2021. We could pop through layer 7, take some profit there, pop through layer 8, sell another 20% of our bag, pop through layer 9, sell another 20%. We never get to the final level. And then it falls down. And once we fall down to layer 8, we buy back in again. And fall down to layer 7, you could buy back in again too. And again, on the way back up, sell, sell, and sell a third time. That is kind of an important little trick to know and play with as we go forward. Let's look at another example of how you use the slider, because this has been, again, confusing people. The reason we built it in is to be able to, again, simulate where we think we could go. For example, if you imagine, I believe, technically in the next bull run, and we're talking over the next 2.5 years, Bitcoin could hit 144,000. It'll most probably hit 100,000. But what does that mean for us? Well, you could take the slider, go back in time, and it'll slide up exactly to where you want to be. So you go over the orange, you look for the little blue button, and you slide it. So depending on where you are, drop it here. That could, if it was at this point in time in history, it would take us 213,000. Go down here, 156. Go back in time here. Again, it takes into account that volatility, $250,000. If you go all the way back to here, you'll see the expectations are much lower, only 53,000. So that's the other kind of reason for this simulator as well that you can play with. And remember, very important is, if you go back to this whole region where we had very solid support of 17.5, if we were back in time here and you bought here 17.5, I did a lot of Bitcoin buying between 17.5 and 18.5, 19,000. And that's in my hodl bag. But if you're back here after everything that happened, imagine we are on the 16th of June or the 12th of June, which we hit the price today, coincidentally, 12th of June. This is the forecasted price for the future, which could be 1 to 2 years out, i.e. at this level, Bitcoin could theoretically hit 81,000. So that could be a more conservative place where you place the slider to determine your layer outs and layer ins as you go forward. Now, in the third scenario here, I just want to share one thing, and I'm just kind of talking out loud to, again, to reemphasize the importance of the in, out. So here we have the potential expectation. This is the automatic one as of this point in time. And remember, this model is dynamic. It is based off the Sharpe ratio, the volatility, the trend, what's happened over the term. And you can change this to anything you want. I'm very aggressive because it's Bitcoin, as I mentioned before. And I like longer trends. But if you go recent trend, with less volatility, it'll tighten up. There you go. It fell down. Longer trend pulls in some of the more historical volatility as you go forward. But what I want to stress here is, in this example, you look at the trades. Now, what I expect could happen over the next 8 to 12 months, we could bounce through these levels. Now, the key part here is, if I could build a system that would determine exactly what the price is going to be at a future point in time, I would be a genius. That is not what this system does. Okay. What this system does do, however, it is very, very good at estimating where support and resistance lines are and where things could go. And we use those lines to determine when we layer in versus layer out. So here, for example, if we zoom in to this actual chart right now, and we had all the volatility over the last day. Remember, you only use this chart on the daily. That's what it's designed for. And we had that huge run up to 25.2 today. And it's fallen back down. But look where it's gravitating. If you look at what it's automatically doing as default, it now believes, based on the recent history and volatility with the settings we have, it believes the new floor is about 19,934. That would be a place where you buy a lot if we did dip down to that level. 22.2 is the new level. Remember I said 21K a few weeks ago was my level where I'd buy more Bitcoin. We didn't reach it because the model is dynamic. It goes up as the price action goes up and the averages go up. Remember that, everybody. So 22.2 is the place where I buy more Bitcoin. I'll layer in. Where I sell the stuff that I buy at 22.2, that's up to me. I could sell it at 24, which is here, or 25, where we were today, 26. But I normally like to wait for the 5 levels. So I start at layer 6, which is 30,000, well, 29.7. Layer 7, 35, 36,000, and then 45K, 55K, 62, 61, 62K. They are the levels I get at. Now, as we go forward over the year or out to September, I do expect a lot of volatility. We could run up to 29K. We could fall back to 26K. At that point, I sell some at 29, and hopefully we get a drawdown back to 26. I buy more at 26, and then we shoot up to 35, sell more at 35, maybe fall down to 29 again, and then up. That's just the way the markets work. And again, it is a scientific process. It cannot predict the future, but it can really put the odds in your favor when it comes to taking profits and layering in. Remember, there's 2 aspects. These are the layers that you can buy in and the layers that you get out. Okay. And remember, it's dynamic. Everything changes. If we go on a rampage, like we did back here, look at this double top, boom, 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 boom. Imagine these lines and how these can come across. Let's pull them over actually, just for giggles. just to show you what I mean by this. This would go up here. This would go down here. This would go up here. This would go down here. And then level 5 would be kind of the final top, just as an example. And we'll take this chart here and we will pull it over. Pull the blue over to these different points in time and go back here. And we'll see exactly what pops, depending on the level of volatility at the point in time and how much it would go. So, and I'm just testing here to give you an example of how this thing could really help profit taking. Slightly too high. We'll go back a little bit. This is how I model stuff. And I used to do this manually. Now I have a system to do it. Okay. So given what I just showed you here, we'll make sure this is extra wide, very high, so we can see it. And highlights are heavy. Make sure you can see exactly how they pop. So on this rampage, we've jumped through 6, 7, 8, 9, 4 of the 5 layers, and we fell down through 1, 2. Look at the way it fell back down to that 32K. And I drew the extension line before I showed this. Then we go up 1, 2, hit 2 layers, and we fall down 1, 2, just missed the 3rd, up 1, and look where this one is here. It is, you could imagine, 47,121, which is just above the 45 level. This is how you have to use this model. Again, it is like an autopilot, but it needs your input. Okay, so everybody, this is a very, very complex model. Burnt a lot of brain cells with this. Took my methodologies going back a long time, and we were able to code them in a system that is designed to maximize your profit. And also remember, when you get out, if it does withdraw and come back in price, you get back in. This will tell you exactly how to get back in. It won't nail every step, but it'll nail 80% of them. And that's how we build stuff. So it's effective 80% of the time. So sorry for being long-winded. This is very complex. We like to sometimes test the tools, dump them out there, let you guys try and adopt them. Some people get it. Some people, they didn't get it. But hopefully this will help you guys get a better feel for exactly how this works. And remember, these extension layers, start getting used to using them and start playing, start thinking about where you see Bitcoin price going in the next cycle. The run we had over the last couple of days has been very, very impressive, up to 25K. That makes me even more bullish than before. Okay, thanks everybody. Bye.